Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com tells us the major markets have been experiencing fearful Fridays but weekly record highs. Gold continues to be strong, but there are questions about silver. Trends Journal publisher Gerald Celente weighs in on the coronavirus, whether the U.S. will drop interest rates to zero or lower, who is behind continued violence in the Middle East, and what's the latest with Occupy Peace. Lobo Tiggre from the independent speculator.com checks in on gold, Wall Street's refusal to fold, and on what the difference is between an investor and a speculator. Plus, at the end of the show, we'll have a company showcase update from American Manganese President and CEO Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
And it's a pleasure to be back. And as usual, the volatility stays with us. I mean, I go away for a few weeks, and market has a few bad days and then manages to eke out a new high again, whether it's in Toronto or whether it's in New York. Pretty exciting days.
Yeah, and we're seeing a common pattern where Fridays, big dip sometimes, a little dip, but always on a Friday, and then during the Monday we climb, and so the overall average is up, isn't it?
Yeah, there's been this fear of weekends, and clearly, I mean, I remember in the days it used to be the same thing would happen with gold. Gold would get knocked down on a Friday and then come back Monday, Tuesday. That anxiety that people have about what can happen over the weekend to various markets, and with the coronavirus and the results we had in that Friday Monday stretch, I think clearly. People are pretty anxious right now. The break on Corona was interesting. It got down to right down to the 50-day moving average as far as the S&P was concerned. The Dow straddled it, and we had been quite overbought leading up to that. The support and the oversold reading that we got like a week ago Monday was enough to produce this secondary high at the end of this week. Now, if there's no follow-through up here right now, if this starts to roll, that would be more of a classic as far as the presidential election years are concerned. So we've been thinking that you could get this rolling effect out of that January, early February period, get a correction that ideally will be a little bit deeper than the one that we did see off the first scare on the corona, and then you could be setting up for a rally as we move maybe into the second calendar quarter. But the tail end of this quarter has a chance of still being choppy, but turning into more of a downside bias than an upside bias.
Are people still heavily invested in the FANGs and ignoring everything else?
Well, they've been moving around in various items. I mean, take a look. I mean, Tesla doesn't seem to be a FANG, does it? Not in the list there, but clearly that's where some of the biggest moves have been seen recently. We got some pretty good exhaustion signals actually on Tesla early part of this week. It's had a nice correction. I mean, some people want to call it the beginning of a bear market. It dropped 20%, but when you have a rally as strong as that one had, if you were to look for more of a a consolidation period, and if it can't then gain some momentum again on the upside, I would say maybe 2 or 3 weeks from now, if it doesn't have staying power, it probably gives back quite a bit more than it did in this first week.
Is gold still sustaining its strength?
It's still been a flight to quality item. We closed off the week around 1574-ish. So it's holding in reasonably well. The bond market also holding in. And interestingly enough, that was with those really good employment numbers both in U.S. and Canada on Friday. Within the precious metals, the one that we've got to be a little bit leery about right now is silver. It's sitting around 1768. And looking at the level, maybe 1740, 1750 is a very important support area right now. It's got itself boxed in. If it can hold above that support, that's good. Getting a close through 1810, 1815 would probably spark about a $1 rally on the upside. So there might be a nice trading opportunity as far as silver is concerned. Going with the breakout, as I say, 1810 and up or 1740 and down, probably is good for at least $1 on the upside. And on the downside, if it starts to crack here, you're looking at probably under 16 before it's finished.
China's got the biggest number of cars on the road in the world, so if they're all staying home because of the coronavirus, does that impact the price of oil?
Oh, well, without a doubt here. I mean, they're trying to find places now to store oil, and everybody's looking for tankers that they can these super tankers that they can fill up with this lack of demand. So you've got oil sitting at about $50.40. It's very, very close to what I would consider a buy signal here. The first break into that $55, $56 range was a decent level to look for support. And I would think something into the 40s right now will look very, very interesting. And a lot of these Canadian oil and gas producers will be worth looking at. And I think there can be some pretty good opportunities there. Interestingly, natural gas is sitting right down at multi-year lows, about levels that we saw in 2016 or all the way back to 1998. And so we're at about a 185 on the natural gas, the nearest futures contract. And we got the monthly charts produced important signals about in September. Invariably, from the type of signal we got there, we'd call it a sequential 9. You'll get a bounce and then undercut the lows, and that's exactly what's happened here. The fourth or fifth time that we've had it in 20-odd years. If it were to bottom out in here and start to turn the corner, I think you can be looking for a pretty good rally. It's going to be stuck probably at $3 or so, but from something in the under 2 to up to 3 can be a pretty good trade for people.
Ross, thank you so much for being on the show.
It's nice to be back in town.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Gerald Celente, next on This Week in Money.
Always consult your investment professional before making any investment decision.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Well, thanks for having me on.
Gerald, could the coronavirus be the so-called black swan event?
It may be, but, I have my doubts, and I'll tell you why. I mean, they're now up to about 600 people have died in China from the virus. And when you look at what they're reporting, is that most of the people that are dying have been chronically ill. So they're either elderly or they've been ill before, so they get hit with this virus and it takes them out. So 600 people in a population of what? 1.4 billion? I mean, it's nothing. And so then they say, well, this is worse than the SARS virus. So I looked up how many people died from the SARS virus. About 800. 800 in that time with a world population of about 6.5 billion people. So we're talking about no numbers at all. Over 60,000 people in the United States die of flu each year. So it may be the black swan event because there's no question that this is really hurting China. And they're closing down shops and quarantining areas. So it's going to have an effect. There's no question about it. I don't think it's the black swan at this point, but it's going to be used as the cause for the slowdown in the global economy. It'll have some impact, but minor impact considering the global economy. But it'll be used as an excuse as to why things are slowing down.
Are stock markets around the world shrugging off the coronavirus?
Because the banksters are still pumping in cheap money. Matter of fact, on Wednesday or Thursday, I'm not sure, the central bank in Thailand cut their interest rates to a record low. Singapore announced that they're going to be lowering their interest rates too. So country after country, central bank after central bank is just shoving the money in there. And it's just a big gambling casino. And do addicts stop gambling when they know they're going to get maybe broke from it? No, they're addicts, so they keep gambling. There's going to be a point when the implications of the coronavirus do hit the markets, and it may come any day. And it will be an excuse for the markets going into correction territory, down some 10%.
Is the coronavirus causing low oil prices, or is it being used as an excuse?
Combination of the two. Oil prices were going down before the coronavirus hit. Oil prices in the beginning of January were at $70, and they started slumping and slumping. Even with they spiked shortly following the United States assassination of the Iranian general Soleimani, and then from that point on, they've been going down. So even heated up war in the Middle East wasn't enough to keep oil prices up because supply is greater than demand. End of story. Period. Paragraph.
Are you going to line up to get a coronavirus vaccine?
Oh, I wouldn't get any vaccine, absolutely not. And it'll enrich the vaccine companies. I just mentioned some 61,000 people in the United States die each year of the flu, and they get all these flu shots. So, no, I won't get any of that stuff.
Do you think the Chinese government might be overblowing the coronavirus in an effort, and a very successful effort as it is, to quell the rioting in Hong Kong and other cities where there's unrest?
No, I don't think that at all. They don't want this. It's hurting. The economy is already in a period of stagflation, flat growth for them. 6.1% isn't flat, but that's a 29-year low for them. And inflation's going up. And now you're seeing their currency, the yuan, going down. That's the last thing that they want, their currency to get weaker as the economy gets slower, and they don't want to lower interest rates because it'll let their yuan go down even further. So they're not doing this purposely, I don't believe at all. And it's hurting business. They just had a terrible Lunar New Year, a time to party, travel, and celebrate. And again, they quarantined, about 50, 60 million people in different cities, and major places had no tourism at all. So I don't think it was on purpose at all.
Are you seeing trends evolving so far in 2020?
Oh, sure. One of them is the biggest one, or one of the top ones, is the New World Disorder. What's going on in France? You mentioned Hong Kong. How about Lebanon? Go to Algeria lately? Hey, they're protesting still in Chile. Matter of fact, just shot a couple of people the other day. Bolivia, Colombia, Peru. What's going on in Venezuela? Iraq. Demonstrations. About 700 people killed already demonstrating. South Africa, Mali, Sudan, Zimbabwe. It's out of control. I've never seen anything like this in my life. And it's basically about the same thing. Corrupt governments, people in poverty, violence, and the people at the top stealing everything, and nothing trickling down to anybody else. So when people lose everything and have nothing left to lose, they lose it, and they're losing it.
Do you see that happening in the U.S. or Canada?
Nah, people don't have the fight here.
The stock markets continue to hit new highs. We've heard the Dow could go as high as 50, 75, 100,000. What do you see ahead?
I don't know. I see the Dow crashing at some point. The when could be a black swan event. It could be a wild card. It could be anything, man-made or women-made or made by Mother or Father Nature. Whatever happens, that's going to bring the markets down. There's a global slowdown. The job numbers came out in America. They're way up, 225,000 jobs created. And you look at where they're created, in healthcare, in the hospitality sectors, jobs that don't pay living wages. Manufacturing, lost jobs. So that's the way. I don't know. The market it's a Ponzi scheme. And for years, we've been waiting for it to collapse, and they keep coming up with new schemes to pump cheap money into it, just like they did with the repo markets. They've already pumped in some $7 trillion since September 17th.
More people seem to be turning bullish on gold and silver. Your thoughts?
Well, it's the safe haven asset, and this is the time to be safe. And we believe gold and silver are going to continue to keep going up. And my forecast has been now for the last 6 years that gold had to break over 14, 15 an ounce before it spiked. And on September 6th, 2019, we sent a trend alert to our subscribers when gold was at $1,332 an ounce, saying it was the beginning of the gold bull run. And now gold is around $1,570 an ounce.
Is the U.S. dollar being used as a safe haven like gold and silver?
Yes, it is, even though the United States has its own problems, considering what's going on with other countries. What do you want to have, a euro with negative interest rates? China with their $40 trillion debt burden? And again, the yuan now going down lower because of their economic problems, because of the coronavirus. What currency do you want to get into? The pound, after they're getting out of Brexit and I don't know where they're going. So the dollar's strong because the other ones are so weak.
What's the latest on interest rates in the bond market?
Well, the interest rates, I believe we're going to see negative and zero interest rate policy in the United States by November. And the reason being, Trump is running for president, obviously, and he wants the economy to move forward. And the economy's slowing down. It only grew at 2.3% in 2019. Expected to grow about 2% in 2020, not his 3%. And because of the way things are unfolding, it could be much worse than that. So they're going to push the Fed to lower interest rates. And on the bond, you have some $13 trillion out in the marketplace of negative yielding bonds, which means when you cash them in, you get less than what you bought them for. And people are going into secure bonds because they're afraid of the economic future. And that's what's pushing gold prices up as well.
We'll have more with Gerald Celente when This Week in Money returns.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Gerald Celente. Gerald, is the big move in Tesla's stock price signaling a boom in the electric vehicle market?
We don't see it. And one of the countries to look at is China, who sells more electric vehicles than anybody else. And when they stop giving incentives, tax breaks, etc., for people to buy them, the sales are way down. And they only account for about 3% of Chinese sales. And they're pushing them there the hardest. The technology isn't up to date. And until it changes, we're talking about batteries, 1800 invention. So we don't see it happening until the technology changes. It's the same thing that we said with the driverless cars. For the last, 3 or 4 years we've been saying driverless cliff. They're worthless. It's going to be so long before you have them. So to us, the automakers are investing in the wrong direction. They need to come up with a better technology than they have now.
Following the impeachment hoax, are the Republicans likely to sweep the House, the Senate, and the White House in November?
It's hard to say whether they'll sweep all the houses, but as it stands now, we're still staying with our forecast, Trump 2020, which we made back in December. Whoever is out there running against him has to win the swing states. Electoral college in the United States, each state, you have to win a certain amount of votes from each state. And whoever gets the most votes gets that state. So the way it looks is that if it's Bernie Sanders, he's not going to win the swing states. That could change, because if a large millennial vote goes out, then that'll defeat Trump. But as it stands now, it's Trump 2020 by default. And it's the fault of the Democrats because they don't have anybody good to run against them.
Are countries like the U.S. and Canada being purposely destroyed from the inside out?
No, we just have sick people running and ruining our lives. You see it in your individual lives, private lives. You run into, I just had an incident with a pathological liar who I trusted implicitly that turned out to be a thief. So you don't have to look to the government. It's from the bottom up and the top down, and the fish rots from the head down. So what we have, name your country, look at the freak running it. As I say to everybody, keep your political crap up your you know what. I don't want to smell it and I don't want to look at it. So it's a freak show, and we have freaks running and ruining our lives. They're not doing it on purpose. They're just sick people.
Are the Democrats self-destructing?
They're self-stupid. Look at them. As I say, I believe in direct democracy. Let the people vote. And the people are too stupid. Oh, you like Nancy Pelosi? How about little Chucky Schumer? Dianne Feinstein? I mean, look at Adam Schiff. Well, it's a clown show. How could any self-respecting person call themselves a member of that party and look up to these people? So no, they're not self-destructing. They're just who they are. Murderous, lying, stealing freaks, both parties.
Britain is officially out of the European Union. Now what?
It's the beginning, I believe, of the end of the European Union. And we're going to start seeing the results more and more as global economies slow down more and more. We just saw how upset Angela Merkel is because the AfD party, the Alternative for Deutschland, who's against the European Union and against immigration, and how they have now allied with a force and have gained some control. So you're going to see more and more of that. And I believe, again, Brexit is the beginning of the end of the European Union. And when that European Union ends, we'll probably be in war.
What's happening in the world's third largest economy, India?
Well, two fronts. And again, we write about this in the Trends Journal in detail. They passed a citizenship law which is discriminatory against Muslims, which are about, I believe, 200 or 400 million of them in India, and maybe even more. And you have massive strikes going on because India has had 6 consecutive quarters of downward growth, and it's only getting worse. And again, when people lose everything and have nothing left to lose, they lose it, and they're losing it on the streets. India has some real big problems coming up, and it has nothing to do with coronavirus, had nothing to do with trade wars. It had to do with too many people, not enough jobs, and too much money in the hands of too few, like everywhere else. But they just have, a 1.3 billion population and extreme poverty. So it's going to be very bad over there.
Is Iran the stumbling block to peace in the Middle East?
The United States is the stumbling block of peace in the Middle East, along with Saudi Arabia and Israel and the allies that support what they believe in. And look what's going on in Israel with that, what they call a peace plan. Now they could steal all the land that they want from the Palestinians. They call them settlements. What is it like? Happy trails to you. We're going across the empty desert. They're stealing Palestinian land, and now it's against international law. And as I've been writing in the Trends Journal now for 3 years, the United States, Saudi Arabia, and Israel have united to take out Iran, because Iran is the country there that's stopping the Middle East, the Saudis, and the Israelis from controlling the Middle East. And what is the Americans doing over there? We have no right being there. Soleimani was killing Americans. No, it wasn't. The soldiers, the the people that were fighting against America's occupation of Iraq, that was based on an illegal war, based on lies, were fighting for their freedom and killing invaders. But no, we'll call them terrorists, and Americans are the good guys because they were sent there to illegally occupy a country. And I feel very bad for the troops that go there because they don't send a senator's son. According to what I've been told, I thought it was 22 veterans are committing suicide a day in the United States. I just did a radio show yesterday, and the host told me it was up to 29. So it's the United States and its coalition of the killing are the stumbling blocks of peace, not only in the Middle East, but for much of the world.
What's the latest on the climate change hoax?
Well, again, as I say, look what's going on with the coronavirus. How about all the poison there? Well, you can't drink the water in so many places because of all the chemicals and poisons into them. How about the chemicals, the thousands of them that they're pumping into our food, into our bodies, into the earth, into the water, into the air? Climate change, you're going to be dead before climate changes. It's one of those, things that the media likes to sell, and it'll stay popular. And again, it'll do very little to change things. Matter of fact, I just read where Japan, I think, is building some 20 new coal power plants. And they're doing that as well in the emerging markets because coal is cheap and they don't want to spend a lot of money for clean energy. So the climate's only going to get worse. But again, we're going to be dead before that. And the other way we're going to be dead is all of this war talk going on with the Middle East. And now you just saw a disgrace to the American people that Donald Trump in the State of the Union address brought in Juan Guaido from Venezuela, who declared himself president back in January of 2019, and brings him in there as a hero. To me, it's a disgrace that he was brought into my house, the House of Representatives. So war talk is going to add more and more pressure, and so we'll be dead by the time the climate changes if we let the freaks keep launching more wars.
What's your latest globonomic news?
Well, the biggest globonomic view right now, of course, is the coronavirus and all the implications. And is it real to the extent that will it be an epidemic? Because now that's what the media is calling it. They're calling it an epidemic. And it's not an epidemic right now. If it does turn into an epidemic, then that's going to have very far-reaching consequences, health-wise and economy. The other side of that, suppose it's not, and it goes away in a week or two, we don't hear about it. This reminds me of when there's a hurricane coming, and they're down in Miami, and they're saying the hurricane's, 400 miles offshore, and they show you the wind blowing, and a woman holding the microphone, and the water splashing in from the ocean, and they go on for days with this, and then nothing happens. Sometimes something does. But that's what this reminds me of, sensationalism. And they're milking it for every virus they can milk it for.
What's the latest for Occupy Peace?
Occupy Peace, we're doing very well. We're raising more money, and we're hoping to have some Occupy Peace festivals this coming July 4th in Kingston, New York. That's our plan. We'll see where it goes. And we need peace on earth because you cannot be creative and evolve in a state of fear and terror, and that's all they sell. Fear and terror. Whereas coronavirus, hate the Iranians. And by the way the Western media is teaching us to hate the Iranians, what's any different than Hitler teaching the people to hate the Jews? So to me, that's the way I see it. So Occupy Peace is my major passion because without peace, we're going down. And you can see what happened and how quick it could go with the assassination of General Soleimani by the United States in early January and how it escalated from there. And by the way, President Trump said that there were no injuries to American soldiers, and now we're finding out some 64% of them have been seriously injured with concussions. So they lie all the time.
How can people find out more about the Trends Journal?
No, just go to trendsjournal.com, trendsjournal.com, the only magazine in the world where you'll read history before it happens. What's going on, what's next, and what it means. There's no other magazine like it, and it's the Time magazine for the 21st century. Time magazine was last week's news. Next week, the Trends Journal's tomorrow's news today.
Gerald, thank you so much for being on This Week in Money.
And thank you, Jim.
My guest has been Gerald Celente, publisher of the Trends Journal online at trendsjournal.com. He was speaking to us from historic Kingston, New York. Coming up, Lobo Tiggre, next on This Week in Money.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Lobo Tiggre. He's the founder of the Independent Speculator online at independentspeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Happy to be on again with you, Jim.
Lobo, we're hearing there's a psychological change in the junior resource markets from being beat up last year to being upbeat this year. What are you hearing?
Well, I guess my take is a little bit different. 2017 was obviously a difficult year for a lot of folks in the sector. 2018 wasn't so bad, particularly for the gold. 2018 was more difficult. 2019, we've had the new year and my brain is still adjusting. 2019 was obviously much better. Gold and silver rose substantially. They logged year-end gains. And in the summer, we had quite the rally that got a lot of people excited in a way that we hadn't seen since 2016. And that is the correct year. There was a rally in 2016. But I think the reason for the question is that I think a lot of people were sort of once bitten, twice shy. That rally in 2016 was impressive. Some stocks pulled crazy returns in those 6 months when gold and silver were rallying, and then it all fizzled and seemed to go back down again. And I think people were worried that the rally of 2019 would be like that. And so that brings us to today. The good news is clearly that's a dead idea. It's done. It's gone. The rally didn't say, okay, we haven't held on to the 1600 peak that we recently saw, but gold has escaped from the 1300 level prison. It's recently been testing 1550 levels. And you know what? I'm fine with $1,550 gold. That's a fantastic level, given that we knew who made money at 1300 and they're going to make gobs of cash at this level. So I think the reality is that we are in a very bullish setup, at least for the precious metals. And then as for sentiment, it's kind of like that whole voting machine versus weighing machine. In the short-term markets are voting machines, and sentiment plays, and prices can move in irrational directions. But at the end of the day, markets are weighing machines. And the weighing machine will see who makes money in the current price environment. And I think that'll be very good, particularly the precious metals producers. And eventually, I think that spills over to the resource sector as a whole. Unless the global market really tanks and that takes down copper and all the industrial metals. But that would obviously be good for gold and silver.
Do gold and silver look like they're now in sustainable bull markets?
I think I've kind of answered that halfway already. The sustainability is what you're keying in on. And I say yes, I can wave my arm and say, oh yeah, gold and silver are going higher. But the real question isn't, am I optimistic, am I bullish, but why? A lot of people are bullish. A lot of people are saying, yeah, we're breaking out. I think that if we look at how stuck gold and silver were for a good 6 years, I call it the 1300 prison, as I referred to before. We've had some scares like the virus and the potential for war with Iran, bump gold up on a shorter term. But when it's retreated, it hasn't gone anywhere near back as low as it was before. As I was just saying, we've been testing as lows the 1550 level, which used to be the ceiling that we needed to puncture. So I'm not a technical analyst, and I'm not going to tell you that those lines on the chart really prove anything. But my view is that whatever the lines on the chart say, the reality that we see in the price is a different appetite level. And it's solid and it's been sustained. It's taken, it's taken what would normally be bad news for gold and silver, for example, days when the Dow rallies, substantially. And it's taken that in stride. Just today, as you and I speak, I don't know when this will air, but it's Thursday as you and I speak, and the broader indices, all three major indices in the U.S. were up substantially, and so was gold. So yes, I think it's sustainable.
When people are looking at gold, should you be buying gold stocks, gold miners, gold certificates, physical gold? Do you have a preference?
Well, I have to quote my friend and mentor, Doug Casey, on that one. Gold itself is a very different thing from the gold stocks. And you buy gold itself for prudence. It is physical wealth you can hold in your hand. It's the only financial asset, or precious metals, the only financial asset that is not simultaneously somebody else's liability. It's pure long. It is money. So personally, I buy gold whenever I can as savings. Doug Casey famously says he never sells his gold. He just keeps adding to it, because it is savings. It is wealth. That's a very different thing from speculating on the stock, where there's potential for outsized gains. They tend to multiply the movements. If gold goes up 1%, it's common to see the gold miners go up 3, 4, 5% the same day. So that's why we speculate on the stocks. And as for the details, whether it's bullion or whether it's pool accounts, that's probably a bigger conversation than we want to have. But there is a bullion buyer's guide. There's a gold buying guide, on my website. If anybody wants to check it out at independentspeculator.com, there's a link there in the special report section that spells out some of these differences.
Do you think the coronavirus could be a black swan event?
And that could be. It is. I mean, it's the definition of a black swan. It was not on anybody's radar, and there it is. I think the real question is, what's the impact? It's here, right? It's happening. And it's kind of interesting. There are a lot of people that are downplaying it. There's only 600 people dead, or whatever the current number is, and that's nothing compared to a regular flu, let alone the number of automobile accidents you happen every year or something. But I think that's sort of missing the point. Well, just on the medical point, this thing is highly, highly contagious. A regular flu has, its typical R0 or R0, as they call it, is 1.28. 1.28 people are infected per person that has a regular flu. This new coronavirus is 4.0, so it's highly contagious. Fortunately, less fatal, but still, it is fatal to vulnerable populations, and it's highly contagious. And the scariest thing of all, and I'm not trying to be a fearmonger here, but this is just a fact. If you look at the charts of the rate of spread and the death rate, both of them are still curving upward. And at some point, that upward curve will hit an inflection point and start curving, downwards again. But that hasn't happened yet. It's still accelerating upwards. So this is a big deal. But the medical issue aside of this black swan event is the economic impact, right? And that, there is no question, it's already huge. A lot of Chinese people not showing up for work, Apple, Starbucks, tons of companies shutting down entire operations in China, cruise ships stopping, airlines stopping flights, the economic impact that we know of right now, that's already happened, right? That's huge already. And given that the contagion is still accelerating, this idea, there's a reported sort of number out there that the authorities in China are hoping that everybody can return to work by February 10th. I'm highly skeptical that will be met. As long as the contagion continues accelerating, I don't see how they can just tell everybody to go back to work. On the other hand, at some point, you've got to go back to work. You've got to get a paycheck. You've got to eat. I'm sure glad I'm not the one that has to make those decisions. But again, the bottom line is, this is a big deal. It's still happening. We still don't know how it's all going to play out. And remember, this is something that mutated recently, and flus and cold bugs are famous for mutating on the fly. So it could change again in unexpected ways. Again, I'm not trying to be a fearmonger here. I'm not saying this is the end of the world. I'm saying it's big. Its dimensions, ultimate dimensions, are not known yet. It's way too early to say this is done or we can walk away from it. And we do know that the impact will be huge. I mean, people are already saying it's going to be something like 2% hit on Chinese GDP. And, for the world's second largest economy, that's a huge hit on the global, GDP growth forecast. So this is big, right?
Well, we're already hearing that car manufacturers in Korea have had to close their production lines because they've run out of supplies from China.
Yeah, and Apple, their new AirBud Pros, they can't ship those, right? This is just beginning to spread, or let's say the contagion is jumping from a medical issue to an economic issue, and the impact of that is still really not known. And again, I don't want to be a fearmonger, but I think this is significant. I think it's crazy for the Wall Street indices to be rallying in the face of this until there are some real answers to these questions. The risk-on attitude in New York and other markets around the world, it's not just the U.S., astonishing to me. Well, but you know what they say, markets can remain irrational as long as you remain solvent. That's fine, but heck, I have no personal interest in jumping on that bandwagon. I'm very, very pleased to have my savings in gold and not in some 401k that's dependent on how these guys in Wall Street handle this.
Is the fear overseas pushing money into the U.S. stock market? They don't feel safe anywhere else.
I've heard that could be part of what's boosting the U.S. markets. I think it's the sort of thing we'll know better in retrospect. So I'll just say it's an interesting theory. It could explain what we're seeing, but anecdotally, you talk to investors, you look at the talking heads on the various financial media, and my sense is that people are writing off this whole coronavirus thing way too soon. Like, oh, it doesn't matter, it's risk on. This bull market could go on for who knows how long. FOMO, man, get in on the action.
We'll have more with Lobo Tiggre when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, is the downturn in China's economy affecting the junior resource sector?
Yes and no, and we'll just have to see how much. So far, as a fear-generating factor, it's been good for gold and silver, and a lot of the junior resource companies are involved in that area because we don't need to get too far down that road, but it's easier for a small company to develop a precious metals deposit because there's so much concentrated value. If you need $5 billion to build a giant copper mine, it's different. It's hard for a junior to field that. So that same factor that's bullish for the precious metals is bullish for that part of the junior resource sector, which is outsized. But clearly it's not good for the industrial metals. Copper fell off a cliff last month as the reality of how fast this virus is spreading infected the economy. How much that will impact other things, we'll still see. Iron also went into reverse. Oil dropped hard, and it remains to be seen. I think actually one of the most striking patterns about this, again, separating industrial from precious, and not just precious. So what is a precious metal? In my mind, I really dislike the term precious metals because it's kind of vague. I think of monetary metals, safe haven assets. Gold and silver have been used for money throughout history. They're monetary metals. They're safe haven assets, and money moves into them when there's fear. That is not the case for platinum and palladium, which are expensive. They are dear. They are precious in the sense that the price per ounce is high. But they're not monetary metals. They've never really been used as money. And it's been quite striking to see how on days when there's fear or risk-on attitudes in the broader markets, gold and silver on the one hand, platinum, palladium on the other hand, have moved in opposite directions.
Is there an abundance of uranium?
Yes. It's one of those things that it's for a number that high in the periodic table, it's actually quite astonishing how much uranium there is in the Earth's crust. But economic concentrations of it are another question. But really, the mine supply is almost secondary at this point, since we've seen so much, devastation in the whole sector, right? And we had for a long time the Japanese selling off excess uranium stocks that they had post-Fukushima, really dragging the price of uranium way below the cost of production. And we've seen that before. When the U.S. and the Soviets signed their denuclearization treaties, and the Russians started grinding down warheads and turning it into nuclear fuel, you saw a vast supply taking uranium prices down way, way below cost of production. That's done. And fortunately, the data tells us that the Japanese selling into the market is done as well. And so as much as the uranium sector is hated these days, and as common as uranium is, prices have actually begun a recovery. They have been, 2 steps forward, 1 step back, but they have been rising since 2016. So yeah, there's plenty of uranium in the world, but it's not being mined at these prices. And that sets up a really interesting speculative opportunity, especially in the low-cost producers or the potential low-cost producers who will be the first beneficiaries as uranium prices rise.
What's the difference between an investor and a speculator?
One of my favorite questions. People are always asking, what stock should I buy? I don't like those questions. They get me in trouble. But this one I can answer with a very clear conscience. Now, there are technical descriptions about allocating capital for return on investment and so on. But the way I like to think of it is actually a Warren Buffett-y way to look at it. And he talks about buying a business that you want to own. He likes Coca-Cola. He wants to own that company. And that's how I think of investment. Investors buy into a business that they believe in. It's a good business that they expect to profit, and they expect to profit from their investment. They don't see themselves as taking a great chance, whether it's buying something at a discount as a value bottom fisher, or buying something because of its great success and an ongoing concern, which is a very low-risk way of looking into the future. Whereas a speculator is specifically buying based on his or her prediction of future prices. That's what makes it speculative. Now, the important thing here isn't really the distinction so much between the investor and the speculator. Everybody at least has a gut sense that the speculator is taking greater chances than the investor. The really important distinction is between the speculator and the gambler. A gambler just tosses the dice. A gambler says, this is rising. What the heck? I'll give it a go. See if I get lucky. That's not speculation, at least not what I was taught and what I practice in my business. A rational speculator is a disciplined person who looks at the world, identifies trends that are happening, sees where they are going, and bets accordingly. Yes, it's speculative. Yes, you are placing bets, but it's not just tossing the dice. You do everything you can, actually, to avoid tossing the dice, to go where you are sure or almost sure a trend has to go.
What does it take to be a speculator?
Well, given what I said, obviously things like, courage, you have to be, have conviction in your trade, and you have to have discipline when things don't go your way, nerves of steel, all that stuff. I don't think anybody would be surprised by that. I think that fundamentally boils down to a contrarian mindset, and I won't be the first one to have said that either. Nothing breathtakingly original in what I'm saying here. A proper contrarian has to be a courageous person, or else you just go with the herd. It's what seems safe. But let me add something else that maybe your audience hasn't particularly heard, or maybe not wanted to hear, and that would be hard work. Proper speculation, differentiated from gambling, as I just said before, is not a get-rich-quick scheme. This isn't all about, here's this latest fad, or here's this hot thing, throw your money at it, and if you get lucky, hey, you'll get rich quick. That's not what I do at all. I'm actually deeply opposed to losing money. I hate losing money. And I feel it very personally, very keenly, if I write something or buy something and my readers follow me down a path that doesn't work out. So I try very hard not to lose money. First rule of investing, don't lose money. I like that rule. And so I work very hard at what I do, and I encourage my readers to learn, not just follow me. I'm not trying to start a religion here. Don't just do as I say. But listen to what I say. Think about what I say. Make your own decision. Do your own due diligence. Let me help you. This kind of gets back to the earlier definition. If you do the hard work, if you really understand why you have speculated a certain way, that gives you the strength of conviction, which gives you the courage to remain disciplined through the ups and downs and all the other things that we talked about before.
Do you have any wisdom for speculators on what to look for and what to avoid in the junior resource markets?
This is another much talked about kind of thing. So I'm trying to think of what I can say that would be original or new, other than, obviously things like, avoid the hype, or people is the first P, as Doug used to always say. That's all true. But I think, at the end of the day, it actually starts with looking into yourself. This is something that I often tell readers or audiences, is that the first priority is to look between your ears and see what you can learn there. Know thyself, as they say. Understand your risk tolerance. Understand, what your strengths are. We just talked about, the hard work and understanding of speculation and how that gives you the conviction and the courage and so on. If you're really good at engineering or sciences, that will help you understand and have that conviction in things that rely on that. If you're not so good at that, if you're more of a people person, well, then maybe something where it's the psychology of a market is more suited to your strengths. But however that plays out, I think that's the number one thing that I don't hear other people saying all the time. And that is, look at yourself first, give a good, honest look in the mirror about what kind of investor or speculator or gambler that you are. And then, act accordingly, play to your strengths, and avoid the things that you're not good at.
When you look at a junior resource company, how important is it for the company to have the ability to promote its stock price higher?
It's quite important, but this is sort of thing that gets me in trouble. Back in my Casey days, Doug had his 9 P's formula, and promotion was one of the P's. And I have seen this in reality, in the marketplace. I have seen this where you get a company that has, it's got the right stuff, it's doing the right things, and the stock just doesn't seem to go anywhere. And often that's because it's run by mining engineers or geologists who get all excited about the rocks, and they forget about communicating and telling that story to the audience. So it is important. I don't discount it. On the other hand, if you deliver it, a home run or hit the ball out of the ballpark, spectacular drill results, the market's going to take notice. The stock can double overnight just on a drill hole. Clearly, that has nothing to do with how well the company promoted it. It's based on the results. So at the end of the day, I do think promotion is important, but it's inversely related to the merit of the project, if you understand what I'm saying.
What is the pre-production sweet spot?
Okay, let's change gears. Well, I'm glad you asked that, because this is, if I have a claim to fame in the resource sector, it's my work on the pre-production sweet spot. For your listeners who've been out there for a while, they may have heard this called the Golden Runway. We decided back in my Casey days that it needed an attractive marketing name, and we used to call it the Golden Runway. But for decades, it's been known as the pre-production sweet spot. And that's basically the period just before a company that has no mining, that's not a miner, it was an explorer, is building its first mine, just that period just before they go into production. And the reason is because you get re-rated. You go from a company that was spending money to a company that's making money. And obviously that changes the value proposition for investors. So this was always known. I didn't invent this. I didn't discover this. It's been out there forever. What I did do, as far as I know, I'm the first one to have published research on, well, what are the gains in that pre-production sweet spot? And the conventional wisdom was that they weren't very great. When I talked to Doug about this, he thought maybe 20%, 30%, because everybody can see who's building a mine. There's no mystery there. It should be priced in. But it turns out that, okay, there's no mystery, and maybe it should be priced in, but it's not entirely. And there is quite a bit of risk still in mine building. Things can go wrong, or you build the mine and it doesn't perform as you expect. So it turns out that it's not all priced in. And what I found initially on a couple dozen cases, and then I've expanded the data to now over 115 cases I have in the database. Turns out the average gain in that pre-production sweet spot is on the order of a double. It's about 100%. But here's the thing, resource stocks can double. That's what they're famous for, big gains. But the odds are always long against, a discovery delivering for you or any other thing. It's hard to predict when a stock's going to double. But it's easy to predict who's going to build a mine. And in fact, 95% of the companies that start building their first mine complete that job. And again, the average gain on doing that is around a double. So I'm not saying that 95% of the time you can double your money. It's more complicated than that. And it is possible to get hurt in this space. What I am saying is that this gives us a strategy that can deliver solid, strong gains. And for the best, the top 5, on the order of a discovery, multiple baggers, 5, 10 baggers are possible in this space at a relative to the rest of the resource sector at a relatively low risk. And for anybody that's curious about this, there's a lot I could say about this. There's a lot of data I've gathered on this. It's too much for a show like this, but I have just published a new update on my research on this pre-production sweet spot. If you go to independentspeculator.com, it should be right at the top of our homepage. There's a big banner for the pre-production sweet spot research. There's a free download. You can download my latest report with all the latest numbers, absolutely free, and find out what I'm talking about.
Are geopolitical concerns growing for junior resource companies?
Well, that's, I think, always and forever, Jim. You can run, but you can't hide, my friend Doug used to always say. Remember when Quebec was like the top-rated mining sector in the world in the Fraser Institute survey for years and years? And then suddenly they changed the rules on their royalties, and Quebec fell. It didn't fall through the floor. It fell from the top spot. No place is perfect. Nobody wants mining in their backyard. So I think that's a tide that rises and rises forever. It's going to get more complicated, more difficult, more expensive, always. And that's bad. It's bad for the economy. It's bad for humanity, if you will. But it also adds to the speculative upside when companies do manage to deliver. By the way, this ties into the pre-production sweet spot thing we were talking about. You don't enter the pre-production sweet spot unless you've got your permits, right? You don't start building a mine without your permits. So that's one of the reasons why the risk in the pre-production sweet spot is relatively low, is that a lot of the jurisdictional risk is gone. Even in a kleptocratic jurisdiction that might seize your mine, even the most nefarious, dirty, down low, stealing government in the world, in some banana republic, they're not stupid enough to steal the mine before you finish building it. They'll let those nice Canadians or gringos spend all their money, build the mine, and then they'll steal it. If they're going to do it, they're going to let you spend the money building it. But that happens after you've exited the pre-production sweet spot. So the political risk, either on the permitting side before going in the pre-production sweet spot, or on the nationalization side after you exit the pre-production sweet spot, that doesn't affect the gains during the pre-production sweet spot.
How many companies do you follow at the Independent Speculator?
I have 2 very different answers for that, Jim. As I was saying earlier, I really hate losing money, and I really, really want my readers to make money, not lose money. So I'm only following about a dozen companies right now in my portfolio, all of which I have put my own money into. In the main Independent Speculator portfolio, it's not just that I disclose that I may own some of these stocks. It's that none of them make it in there unless I'm willing to put my own money into it. It's a high conviction trade, and so I'm keeping that manageable. It's not a hard limit at a dozen or so, but something has to be pretty darn good for me to add it to the portfolio. I have to be convinced it's a great speculation I'm willing to put my own money into. On the other hand, we've started a new publication called My Take, which does not have a portfolio. It's just my take on companies that people are interested in or that are making headlines in the junior resource sector, companies that are interesting or important for various reasons. I give my take on them. That does include a general thumbs up or thumbs down, positive or negative take, as well as the pros and cons and the basic story and so on. But the idea there is not to have a portfolio of recommended stocks, but just to give people the benefit, for whatever it's worth, of my experience, my network, all the mines that I have kicked over the years, and it's hundreds. I've kicked rocks on all these projects around the world. So I give my take on these companies. Right now, there's 163 in my take, and that puppy's less than half a year old. So over the years, that's going to turn into hundreds, I think. Now, I want to say this isn't companies that I follow closely. These are stories that are making news that I give my take on. But there's a lot in there. Anybody who wants my take on a company they may own, you can find that on the website too. There's another bold headline on the main page there that gives you the current number of companies that I've given my take on and where you can go to find out more about those.
Which sectors are you presently focusing on?
Well, as we've just been discussing with the coronavirus and all these ups and downs, I'm very, very bullish on precious metals. And by that, I specifically mean the monetary metals, gold and silver, and most specifically silver. I'm bullish on both, but I see more upside in silver. I think you and I have talked about this before. Silver, as the monetary metals move, silver tends to lag gold and then more than make up for it. Whether that happens this time or not, we actually did see it last year in 2019 in the summer when they rallied. Silver lagged at first and then caught up or moved more quickly. Whether that pattern holds or not, silver is just relatively cheaper than gold. As the two have moved up, silver has not moved up as much as gold, and that makes it a better bargain. It's hard to find great silver plays. There's fewer of them. But that makes them all the more interesting to me. Within that, I do favor the pre-production sweet spot. I also, I'm not really big on very early stage exploration. I like what I call success in progress. If you're not in the pre-production sweet spot yet, then you've already got something. You've made the discovery. You're drilling it off. It just keeps getting bigger and bigger. I like that kind of success in progress. Apart from the monetary metals, I do like uranium that we talked about, but that's the high risk, high reward end of my portfolio. That's the swing for the bleachers end. Uranium could go horribly wrong. I'm extremely bullish. I don't think it will. I have put some of my own money in uranium stocks, but I understand that's high risk, high reward. That's what I'm focusing on, and by implication, what I'm not focusing on is industrial metals. I'm very bullish on the ones that go into batteries and all this new energy paradigm that we've talked about before, but not in the immediate term. And the global economy was cooling already. The coronavirus isn't going to help. I think there's potentially a fair amount of pain still ahead for industrial metals and other minerals in the near term. So I am avoiding those right now for the time being.
Should you hold on to your cash right now with the coronavirus threat and then take a look at what's affordable after the market shakes it off? Because right now the equity markets are still reaching record highs every week.
That's what I would do. I have lost out on gains, but you know what? Maybe I'm a mutant, Jim. I'm just not susceptible to FOMO. I don't fear missing out. I don't care about missing out. I care about making money. I care about not losing money. And if I skate out onto that thin ice because the party looks so grand, it's been going on so long, and who knows when it will stop, and I strap on my skates and I go out there and the frickin' ice cracks right under me when I do that, how stupid would I feel? And I would have broken my rule. I would have lost money. I'm just not doing it, Jim. I don't care if I miss out on that party. I do care about allocating my speculative cash in areas where I think it'll do the most good, and I have high conviction of. Other than that, going to cash, hard to get hurt going to cash. Cash is a good thing to have, especially when there's plenty of risk out there around the world.
How can people find out more about the independent speculator?
Well, we've touched on a couple things already. I guess the thing to just remind people is independentspeculator.com is there. You can look for the pre-production sweet spot report. Should be right up there. You can look for the 163 takes and counting if you want to hear about my take. There's an about link. There's pages that describe the various services and so on. But maybe the one thing that I would really stress, maybe a little different from a lot of other publications, is that if you use the contact page and you send me an email, I will reply. I personally will reply. I just started this business. I'm a startup, not from Silicon Valley, but I'm a startup. So it's still a small enough business that I'm still able to correspond personally with all of my readers, and I do.
Lobo, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Lobo Tiggre, founder of the Independent Speculator, online at independentspeculator.com. You can find him on Twitter at Due Diligence Guy. He was speaking to us from Puerto Rico. And that wraps up our show for this week. We'd like to thank our guests, Reaugh Clark, Gerald Celente, Lobo Tiggre, and thank you for listening. If you have any questions for our guests or the show, you can send them to info@howstreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Jim, always a pleasure.
Larry, I don't notice much of a Texas accent, but apparently you had a pretty good time in Austin.
Yes, we were down there last week, and we went to the Fully Charged show. We had a booth, and Zarko sat on a panel. It was, I would say, over the 2 days, there were 5,000 to 7,000 people, or 6,000 to 7,000 people that came through, and we had a lot of interest at our booth. We've met some interesting folks, some of which were interested in buying the shares, and some of which were just interested in our technology, and so it was a great time. It was had by all on that, and it was one of the best shows I've been to in a few years, so and it's in the right venue for what we're doing these days, so it was very beneficial to the company. We got to look out there in the huge parking lots outside, and I'd say that 60-70% of the vehicles parked in those parking lots, which were thousands, it looked to be like they were all Teslas. So there's a lot of Tesla folk there, and they're definitely huge fans of Elon Musk and huge fans of the vehicle itself. And you find that talking to these types of people, they had big concerns about what was going to happen to the battery at the end of life. How are we going to deal with that in a responsible manner? And of course, that's what we're working on. We've got patents. We'll be keep fine-tuning, and because that's going to become very important very quickly. Now, the other vehicles that were out there, the only one I'll mention is the Rivian. That was a very nice-looking vehicle, had big crowds around it, and I think that's going to be another success story. And, I certainly liked that vehicle, even though it looked an awful lot like a 3/4-ton GM or 3/4-ton Ford or 3/4-ton Ram. So, but with a lot of electronics on it and a lot of other things that made it into an electric car. So that was an eye-opener. So I can only say that the Fully Charged meeting, which was our Fully Charged convention, was excellent, and we made a good showing there. Zarko did a great job at the panel. We met some of our competitors and people on the other side of the business, and so again, we came home with feeling very, very good about it. The trip down was a horror story. Actually, the first day we had no sleep, and the trip back was uneventful. So that was good. But the trip down was, that was a 15, 16-hour deal.
Now, let's move on to other things. We had a news release out with IRAP, which is a government funding agency for technology, and they have funded us to actually go back to the Netherlands and talk to our potential partners there, and we'd like to tie things up very soon on that end of it, because this would catapult us into actually making some very significant applications through IRAP for funding. So again, that's an excellent thing. And the other thing that really shocked the market was the run-up in Tesla. Since late October last year, the stock went up almost 4 times to $980 intraday, and it's trading now at $750. But that certainly was the big talk of the whole week here. Everybody is following Tesla very closely, and almost hitting $1,000 a share was big news. So we wish them the best on recovering from that, but they've got to go back and fill some gaps, and when that's done, I think the stock will continue on. Unfortunately, it got hit yesterday with the closure of their Chinese plant due to the coronavirus, so they're suffering a little bit, but it happens to all of us. And so it's just been a great week for EV cars, EV batteries, EV recycling. We're getting a lot more interest. We're starting to get some proposals, and whether they fit our pistol or not, we don't know, but that's everybody thinks that maybe we're sitting out here just waiting for something to happen, but there's been a lot of movement over the past, actually, 3 years. The only thing that I would mention is that after we published our patents were published, U.S. patents were published, we don't get any calls from China anymore, so you can guess what's going on there. And but we're getting a lot of interest out of India on the on what we're doing, and we get, I don't know, 2 or 3 queries a week on from Indian hopeful participants. So I just really think that we had a great week, and the stock is obviously getting some buying into it, starting to strengthen, and so I'm hoping that this will continue, and we've got nothing but good news. Hopefully next week we'll have the first report on the stuff we're doing for the DOE, and we'll just have to see what happens there, Jim. But it was a super week, starting on Sunday of this month, and ending today at close to noon here on Friday. I think that the shareholders should be happy with the progress the company's made. We're certainly happy. Management's happy with it, and we'll just move on from here.
Larry, for people new to American Manganese, what is your company all about?
American Manganese is a critical metals company, and I don't want people to lose focus on the fact that we have the solution for supply of manganese in the U.S., which is, in my opinion, is the most critical metal. And from that solution is our cornerstone for our recycling. We hold patents on that solution, and we hold patents on the recycling, and we're hoping to get a third patent filed here very soon. And the company is traded on the Toronto Stock Exchange Venture under the symbol AMY. It's traded in the U.S. under the symbol AMYZF, and it's traded in Frankfurt under the symbol 2AM. Now, if you want to do some due diligence on the company, go to our website at AmericanManganeseInc.com, or you can phone me at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome, Jim.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on February 7th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.